In the last few years, the trade war between the US and China has been dominating headlines, but how will it shape the global economy in 2025? Will these trade tensions lead to long-lasting consequences for economies worldwide? What does the escalation of tariffs mean for businesses, industries, and consumers? Are we witnessing the beginning of a new economic era, or is there hope for negotiations and de-escalation? Today, we're diving deep into this complex issue, breaking down how tariffs, export controls, and retaliatory measures are affecting economies, industries, and consumers across the globe. Stick with us as we unpack the growing tensions and the potential consequences for markets worldwide. Let's jump in. The US-China trade war didn't just emerge overnight. It started during President Trump's first term, where both nations imposed tariffs on billions of dollars worth of goods. The root causes of the conflict go beyond trade imbalances. China's alleged intellectual property theft and its approach to state subsidies were key points of contention. The idea was simple. The US aimed to reduce its trade deficit with China, hoping to force China to open its markets more fairly. But China responded with its own set of tariffs, retaliatory policies, and even restrictions on US agricultural products. Fast forward to today, and while the tactics have evolved, the trade war is far from over. By 2025, after a second term for President Trump, we're seeing even more aggressive measures being taken. Let's break down the latest chapter in this ongoing conflict. This year, in January 2025, President Trump made a major announcement: a sweeping 10% tariff on all Chinese imports, signaling his commitment to his original trade war goals. This move follows through on his campaign promises to bring back jobs and manufacturing to the US, targeting what he believes are unfair Chinese practices. But this new tariff isn't just a headline, it's part of a broader strategy to punish China for its role in what the US sees as a global trade imbalance. The 10% tariff is expected to affect everything from consumer goods to industrial equipment. While the US tariffs are making headlines, China isn't just sitting back. They've deployed countermeasures of their own, most notably export controls on critical minerals. These rare earth elements are indispensable to produce everything from smartphones to electric vehicle batteries. Tariff is expected to affect everything from consumer goods to industrial equipment. By limiting exports of these minerals, China is putting a massive strain on US manufacturers who rely heavily on them. Industries like tech and automotive, which were already facing supply chain issues, are now looking at significant delays and price hikes. On the US side, the impact is already being felt by businesses and consumers alike. With these new tariffs, companies that rely on Chinese imports are facing higher costs. And while some of these costs can be passed on to consumers, others can't. Take consumer electronics as an example. A smartphone that costs $500 today could easily see a price increase, as manufacturers must absorb some of these additional costs. For many US households, this could translate to higher prices on goods they already consider essential. While the tariffs on Chinese goods are a clear example, other sectors aren't immune either. For example, the agricultural industry in the US, which has already been hit hard by Chinese tariffs on soybeans, pork, and other products, is now dealing with even more uncertainty. Farmers who were already struggling are now facing new challenges, with exports becoming less competitive due to the additional tariffs, and China looking to diversify its sources for food products. The fallout from this trade war isn't just a problem for the US and China, it's a global issue. With tariffs increasing, many businesses are looking to shift their supply chains away from China to minimize the impact. Canada, Mexico, and even parts of Southeast Asia have become more prominent players in global trade as a result. But here's the issue: shifting supply chains isn't an easy fix. Countries like Mexico are seeing a rise in demand for their products, but they don't yet have the infrastructure to meet the global need. Similarly, while countries like Vietnam and Thailand are getting more attention for manufacturing, they can't replace China overnight. In fact, a study by the Asian Development Bank found that it could take years for many of these countries to fully scale up their production capabilities to replace China's role as the world's factory. Until then, companies are forced to make do with higher costs and more logistical complexity. Canada and Mexico, as close neighbors to the US, are inevitably caught in the crossfire. On the one hand, they benefit from the trade disputes by picking up the slack left by China's exit from certain markets. On the other hand, they are also facing their own set of challenges. For instance, Canada has seen a surge in demand for its energy exports, particularly oil, as the US seeks alternatives to Chinese goods. But with China's shift away from US oil, Canadian oil producers are now able to fill that gap. On the other hand, Mexico, while benefiting from a stronger manufacturing sector, has also seen tensions rise along its borders. As the US looks to protect its industries, it's increasingly questioning trade deals with its southern neighbor. Trade between the US and Mexico remains crucial, but any changes to NAFTA or a potential US-Mexico trade war would significantly affect the flow of goods. This uncertainty is putting pressure on companies and workers in both countries. As the US-China trade war intensifies, global markets are becoming increasingly volatile. Stock markets are reacting to the uncertainty, with frequent fluctuations driven by new tariffs, sanctions, and shifting trade policies. Investors, concerned about the future, are growing more cautious and have begun reallocating their assets towards safer investments. Commodity markets, too, are bearing the brunt of this conflict. Prices for key commodities like oil, metals, and agricultural products are fluctuating wildly. For example, oil prices are swinging unpredictably, while the cost of wheat is now being influenced by changing global demand. This unpredictability poses a significant challenge for industries that rely on stable pricing to plan and operate effectively. Emerging market currencies are also feeling the strain. Countries such as Brazil and Australia, which rely heavily on exports to China, are witnessing economic slowdowns as Chinese demand for goods weakens. This decline impacts not only local economies but also the broader global supply chain. As we wrap up this analysis, it's clear that the US-China trade war is not just an isolated economic issue. It's a turning point with the potential to reshape global markets for years to come. With tensions continuing to rise between the two largest economies, the ripple effects are felt far beyond China and the US. From factories in China to tech giants in the US, and from large corporations to everyday consumers, everyone is affected by the ongoing uncertainty. The pressing question now is, how much further are both sides willing to escalate the conflict? Will there be room for negotiations and compromise, or are we on the brink of a deeper economic rift? Could this be the dawn of a new economic order, or are we witnessing the slow unraveling of trade relationships that have held the global economy together for decades? While we may not have all the answers today, one thing is certain: the global economy is entering a critical phase. The future of international trade and diplomacy hangs in the balance. Whether you're an investor, a business owner, or simply a global citizen trying to make sense of the world, this is a story that will continue to unfold in the coming months and years. As we close today's deep dive, remember that the consequences of these decisions will be felt far beyond the halls of Beijing and Washington. They have the potential to define the next decade of global economic relations and influence the balance of global power for generations to come. Thank you for joining us as we explored the ongoing trade war between the US and China and its far-reaching effects. This conflict isn't just about tariffs. It's reshaping international relations, disrupting markets, and challenging businesses and consumers alike. The big question remains: can global markets adapt to these changes, or will they face long-term consequences? What do you think the future holds for global trade? Will tensions de-escalate, or will they escalate further? Share your thoughts in the comments below. If you found this video insightful and want to stay updated on international affairs, global economics, and trade policies, don't forget to hit that like button, subscribe to our channel, and turn on notifications so you won't miss future content. Stay tuned for more in-depth analyses on the world's most pressing issues. Until next time, keep exploring and keep learning.